If you follow me at all in any of my podcasts, one thing that I always go to is the data. People have opinions, but without data, you're just another opinion. And the flip side is that with good data, we can help make good decisions for us and our customers. Really excited to have today, really, I think the person is seen as the dean or the guru, if you would. That sounds demeaning, but the expert on using the math on helping people understand their retirement income options, and in particular, how they get married with reverse mortgage because of his experience in talking on that topic. Professor Wade Pfau. Wade, thank you so much for joining us today.
Absolutely. It's a pleasure to be here, Bill.
Now, I come from a world, when I was in high school and college, I was on the debate team. We did a lot of research. I learned a lot about statistics. I'm very comfortable taking scientific studies and going into numbers. And I find that as a consumer now, years later, people are just baffled by numbers and statistics. And anybody is like a statistic is almost like a fancy picture to change people's direction or focus. What are one or two of the most biggest misconceptions that you find that professionals have, they talk to customers, or that you see that consumers are being faced with on retirement income or reverse mortgages? What are one or two of the numbers you go, well, that doesn't make sense, or that theory or that principle is not correct based on the data?
Well, I think one of the biggest misconceptions is really just the misunderstanding about what changes when people retire. I think when people are working and saving for retirement, financial market volatility, it's one of those things that in a way you can benefit from a market downturn when you're saving because you actually then get to buy more shares with your savings. But how that flips post-retirement, if there's a market downturn and you're having to sell from investments, that can really dig a hole that becomes difficult to recover from. And so when people just bring in the logic of, well, markets should do fine over the long run, it has the math works differently when you're spending from those assets in retirement. And that's really the entry point for how a reverse mortgage growing line of credit can contribute to a financial plan in retirement. Probably the other kind of misconceptions too just relate to the whole structure around how reverse mortgages work and why the growing line of credit exists, and how, with what I'm talking about with the way the math works in retirement, reverse mortgages have costs associated with them, but the benefits to the overall financial plan can be well in excess of any costs so that you get that better outcome. And I think that's also something that people really struggle to wrap their heads around as well.
I launched this podcast because as a practitioner in real estate, I see people so miseducated about this tool. And it's like any other tool. You wouldn't want to use a hammer to screw in a screw. You want to use a screwdriver to hammer a nail. Unless you're in an emergency, but they both are effective tools when used right. And you bring up, a phrase I hear all the time, particularly from attorneys or financial planners, that, well, reverse mortgages are very expensive. And I feel like saying, well, you're an attorney, you're not exactly cheap, and you would tell me that your fee is worth it because of the expertise or the unique value you bring. So talk a little bit about, while a reverse mortgage can be expensive, how can it provide some unique financial opportunity or leverage or freedom for consumers?
Mm-hmm. And well, I've built my career around simulating different retirement strategies. And so kind of the starting assumptions for this conversation are, you've got an investment portfolio, you've got Social Security benefits, you may have other income sources too, but then also you're thinking about how to use home equity and whether a reverse mortgage could benefit the plan. And so then it all gets down into spending from your investments in a sustainable and strategic manner, and when it might be beneficial to tap into covering some of your expenses through the reverse mortgage to give relief to the investment portfolio and to help set that path for the portfolio to be more sustainable and to grow over time. And then that's where done plenty of studies on this idea that by strategically spending from the reverse mortgage, so paying those setup costs to have it, it's a loan, so interest on the loan, how that overall leads to a better situation for the investment piece of the financial plan. The investments are not as burdened by covering distributions for expenses. They're able to grow. You're able to weather market downturns because you're not selling at a loss from the portfolio. And so then the benefits to the investment portfolio more than exceed. You can pay off that loan balance, pay off the expenses of the reverse mortgage, and still have more left over after that. So you have a better financial planning outcome. And that's really the basic intuition. It's the benefits to your other assets more than offset the cost of the reverse mortgage in a financial plan for retirement income.
And you mentioned not selling stock perhaps at losses, but also the opposite is true, right? We have people, particularly here in Southern California, who are retiring on Tesla stock. Just use one that I see commonly. They have huge capital gains, and if they're going to live off of selling the stock, they're going to pay not just the stock and the price is up or down and how that plays into the decision, but they're going to pay taxes on that versus reverse mortgage. They're not going to pay taxes on the withdrawal, obviously, at the time that they do that. So talk a little bit about how you factor in tax limitations into the math process. Is that part of the calculation that you do when you analyze people's retirement program?
Oh, absolutely. Yeah, reverse mortgages, it's a way to spend as proceeds from a loan. So it's not something that goes into your adjusted gross income. And with the new legislation passed in July 2025, taxes are getting more complicated. There's a bunch of new deductions that phase out with income and things. And that's all based on your adjusted gross income. So if I have an expense I need to meet, well, if I draw from my IRA and create that ordinary income, or if I sell taxable assets and create those long-term capital gains, either way, both of those sources go into my adjusted gross income. That could cause me to have to pay tax on more of my Social Security benefits or at higher income levels. That could also be pushing my long-term capital gains because they go on top of ordinary income from the 0% bracket into the 15% bracket or even higher brackets at higher income levels. That could cause me to have to pay more Medicare premiums with the income-related monthly adjustment amounts for Medicare premiums that start 2 years before you actually begin with Medicare. If I use the Affordable Care Act for health insurance, I may be losing out on subsidies when I generate ordinary income. Now with these new phase-outs, if you're 65 and older, there's an extra $6,000 deduction, but that starts to phase out once modified adjusted gross income measures get to $75,000 for individuals, $150,000 for married filing jointly. And then so you end up paying a higher effective marginal tax rate. If you're now with the new increase in the state and local tax exemption of $40,000, it's at higher income levels, but that phases out at a pretty aggressive 30% rate per dollar. And these are all situations where if I have to meet an expense, $1 of ordinary income can end up getting taxed at a much higher rate than just what the income tax brackets would imply. And so being able to tap into an asset such as a reverse mortgage, it's like a Roth IRA in this regard, an asset that allows me to meet expenses without creating income that goes into my adjusted gross income, can really help save me on that tax situation, to avoid paying at higher tax rates and to avoid all these other aspects of the tax code that can increase the amount of taxes I'm effectively paying on that income.
How much of your personal business is, I know you're a researcher and academic, but I also know you do financial planning as well, I think, don't you? You have customers that you do plans for and advise?
I do work with a financial planning firm based out of McLean, Virginia. I'm not personally a financial planner, but I work with a team and join meetings and things. I'm not running the day-to-day planning, but yes, I am part of a firm.
So members of your team will bring in a client who wants to have a presentation or review or detail that analysis, and you're more part of the support for the client advisor person. Got it. But so you involve these discussions with individuals, with consumers, right? Your team members, clients. It just seems that there's so much emotion and so much false information people grab onto. Just yesterday I had a phone call as a result of this podcast from somebody who saw this and called me in a panic that he knew that President Trump was going to eliminate his Social Security. He was a natural citizen, 70 years old. I said, well, I'm not sure where that comes from, but okay. And therefore he wanted a reverse mortgage because he needed Social Security to live on. And I tried to explain to him, well, I don't think there's a plan on the table to eliminate Social Security for you. You might be concerned about its financial viability. That's an interesting discussion. Okay, but that's what he was worried about. It was almost like there was a bill in front of President Trump ready to sign tomorrow. And that's why, and yet at the end of the day, when we had the end of the discussion, I said, well, but you have this house paid free and clear. Why would you not have at least a reverse line of credit on it or some money on it? And it just seems that he was so focused on this one piece of, I would say, misinformation, that he wasn't looking back at the whole thing. And I know even with more sophisticated customers, often they get very focused on one thing. So talk a little bit when you make presentations, how do you kind of present them in a way that helps people look at the numbers, the data, which is the hard work, rather than just the easy, line that's going to get them all riled up and get them to sign with your company or sign with your agent's proposed plan.
Yeah, well, money is ultimately fungible, but I think a lot of issues come up with just mentally allocating different assets for different purposes. And so some of the misconceptions on the reverse mortgage side, it's like, well, the house, that's my legacy asset. And so I don't want to touch it. I want to leave it alone. But ultimately, that money is fungible. And so if you can more strategically protect your investment portfolio by drawing from the home equity, then the legacy becomes that surplus from the investment portfolio. Kids often don't really want to inherit a home. It's not convenient. But I think that other big myth out there that still exists is the idea that you lose the title to the home as part of the reverse mortgage. Right. And that was never the case with what we're mainly talking about, the home equity conversion mortgage program administered through the federal government.
Yeah, I mean, I think there were people who lost their mortgages, what I call reverse mortgage 1.0, the prior versions, and because of the equity and some other things that went on. But with the products today, it just isn't the case, right? You're not going to, even if the house is worth less than the mortgage, you're not going to lose the house as long as you're alive. And I think that's some of the great, on the HECM products in particular, that's one of the great benefits of this opportunity that's in front of people. But yeah, the emotions do seem to be a big part of it. And so obviously you're an analyst, you're a researcher, you're a numbers person, but do you just present that and let the agent handle discussions with a client, or do you get involved in trying to convert the hard data into persuasive discussions? What's your role in that process?
Well, I actually more on the side of educating financial advisors about retirement income topics with my work at the American College of Financial Services. We have a retirement income certified professional designation. And I think the interesting aspect there is when it comes to reverse mortgages, because there's often the negative impressions and misconceptions, there's a matching problem that goes on where if an advisor learns about reverse mortgages and becomes open to them, well, then they run the risk of, if they're talking with one of their clients and the client has a negative impression, they're worried they're being scammed by their financial advisor. And Correct. So you have to come at it from both angles. It only works when both the advisor and the end consumer understand the potential benefits of the reverse mortgage. So my focus is really on education and showing the numbers and running simulations and showing what happens with different financial planning strategies and how, if you're going to incorporate home equity into your retirement plan, opening a line of credit sooner rather than later can strategically, not 100% of the simulations, but really the odds are in favor of that leading to better financial planning outcomes. And in particular, working as a risk management strategy, that when financial markets are not doing well in retirement, opening that line of credit on the reverse mortgage and using it strategically helps protect against that financial market risk during retirement.
Now I know you work with organizations already. They're kind of, in a sense, bringing some interested customers or prospects or financial planners to you for education. There are a lot of people who are watching this who are financial planners or attorneys or originators who don't have that, right? They have to kind of reach out and they have to kind of get that process started. And like you say, the risk is you can have the best product and answer in the world, but the customer thinks it's a scam. They may not give you the chance to even explain yourself. So I run this podcast to try to help reach out and educate consumers who are interested. So take off your hat as the member of the faculty and just as a consumer in America, seeing the struggle people have with retirement, seeing the massive amount of money being changed. What should we be doing? What can we be doing as professionals to better educate so people take a more professional and numbers-based approach to these questions rather than just the latest headlines that are on CNBC and then overreacting as a result of that?
Yeah, I think the focus is on just recognizing the house is an asset, and what a reverse mortgage is ultimately doing is creating liquidity so that you can spend from the house in the same manner that you spend from your IRA or you spend from your brokerage account. These are assets to be used for your retirement. And a house by itself, it's not liquid in the sense of I can't just carve off a chunk of the house to spend it. But actually, with the reverse mortgage, that does free up the opportunity to spend from my home equity and to treat that as an asset alongside my IRAs and my brokerage accounts and my Roth IRAs, so that I can then figure out what's the best plan for how to spend from these different assets to get the best possible outcome in retirement. And with not losing the title of the home as part of the reverse mortgage, it's still an asset. And if your heirs do want to keep the house, if you're thinking that the home is for legacy, well, assuming you didn't spend down all your assets in retirement, that's a whole kind of separate conversation. You still will, they'll be able to use some of those surplus investment assets to pay off the loan balance, keep the home if they'd like to, but then still have a bigger overall legacy that they've received from that retiree. And if you're in a situation where there are no assets left at all, that's a different conversation, but that's really getting into the reverse mortgage may have allowed for a more comfortable retirement for much longer than would have otherwise been feasible, just because there really weren't the resources there to have the kind of retirement that had been envisioned.
Right. Yeah, there are people who live with no income on their Social Security, and they live in a house that's paid free and clear, and may make bad health decisions or limitations on what they can get done to make the quality of their life while they're sitting on the equity. So I see that. Another misconception I see is very rarely do heirs want to keep a house to see. You talk about the legacy house, and oftentimes I think the parents feel that way. Way more times heirs keep house because they have to, because there's no liquidity, or the plan wasn't done right to separate out the asset. Then I see people want to keep it. Either they're not wealthy and they need the money, can't afford the house, or they're the kids are on their own, financially independent, don't want to move into mom and dad's house because they have their own place with their own kids, their own life. And so I think it's just interesting you bring that up, and I'm just always interested in how rare that lines up with reality, at least in my experience. Maybe it's different. I'm in LA, maybe it's different in other parts of the country. But so I know you do a lot of speaking at industry events, and in particular you're a very hot speaker on in the reverse mortgage world at live events and online events. And I know that while you're either in the give and take, or just while you're waiting to talk, you hear other professionals in that industry talk a little bit about the reverse mortgage industry. Where do you see it moving? Do you see them moving in the right direction of education and reform? Do you see them striving for the levels of education that it's going to take, or do you feel like you want to push that along a little bit? You have a chance to kind of speak to some of them, because a lot of that's my audience on this podcast.
Mm-hmm. No, I think there's been a lot of progress in educating financial professionals, consumers, about the value of reverse mortgages. I know reverse mortgage professionals have been very active in financial planning associations. In many cases, like the president of the local financial planning chapter is someone from the reverse mortgage sector. And so that's really important and valuable in bringing the message to a wider audience. We see just with the number of reverse mortgages every year, there's not been a lot of growth, and it could be for various reasons. But it's an ongoing struggle, and as more Americans learn, I mean, there was a study, it's been about 10 years back now, by Mark Warshawski, who used data on households and estimated that about 14% of households at like age 62 plus, so eligible for reverse mortgages, could really see stark benefits to their financial plans through the reverse mortgage. And 14% may seem like a low number, but when the percentage of households eligible for reverse mortgages that use them is actually somewhere in the ballpark of 1%, there's so much opportunity for growth and for the opportunity to improve a lot of retirements. I mean, it's 14% partly because not every retiree owns a house, so then there's no conversation around the reverse mortgage and so forth. But getting that number from 1% up to the 14% of households that could truly benefit, I think that's a very important step, and work's going on all the time to move in that direction.
When I launched this podcast, I'm a professional in real estate. I was looking to buy a house. I live in Los Angeles, and my wife and my daughter and grandkids are nearby. But I wanted to move to Florida. I was married in Florida, and for various reasons, do business there. And of course, taxes are lower in Florida than here. And so I was kind of fantasizing, well, I could buy a condo there, make my residency there, keep our house here. I had a certain amount of cash. And I was embarrassed to find out that I'm shopping for a house with the cash I had available to buy. I hadn't considered reverse mortgage on the purchase. I'm thinking I want to pay cash. I didn't want to take on more debt. So I was going to buy a house, with about a condo for about $500,000. I wasn't finding much I liked. And also I realized, well, hold on, I could do a reverse mortgage after talking to somebody. And also now I'm shopping for $800,000 condos. And that led me to discover that as a real estate broker, I think we should be doing about 10 times as many reverse mortgages as we are. And you mentioned the 1% to 14%, which is 14 times. And so I see that. So, obviously that's somebody else's research. It just seems to me that between people who have equity for protection purposes, for diversification purposes, just for all the reasons we mentioned, that really this is like one of the few industries where there's 10 times the market that should have the product. It's not like we're saying, you should buy Coke versus Pepsi, or you should use mouthwash. These are people who have money sitting around available to them that aren't, and it just seems to me that it's just a mystery, other than the lack of education, that's why I appreciate so much having you, and I think the misconceptions of the past. That's not really your topic, though. I don't think you really get into kind of the servicing issues of the past and the current servicing issues. But to me, it seems like it holds back the industry. Do you come across that in your talks? I guess what I'm referring to is the classic mom and dad both passed, and then they immediately sell the loan to some servicing organization that just goes right to foreclosure, and the kids don't feel like they had a fair chance to manage that problem. Oftentimes the risk of foreclosure. That seems to be a big servicing issue that gets a lot of bad press and bad discussion in the marketplace. Does that enter into your world as far as research and presentation, or is that part of the pushback of, gee, it's a scam, they're just going to foreclose my house?
I don't do research in that area, but yeah, I'm aware of, like, the Consumer Finance Protection Bureau has written reports on that. And that servicing issue does seem to be where a lot of the complaints come in. And it's something, unfortunately, not entirely controllable, because you can do the due diligence to pick the company you want to work with, but then often the loans are collateralized and sold off to third parties, and the servicer ends up being a company completely different from what you might have pictured with who you had chosen to do the loan with. It's in that regard, though, working with a really dedicated reverse mortgage lender in the first place. With my book, I've in many situations helped consumers find a reverse mortgage lender to talk to. And then I've heard very good stories about how, like in one case, there was hail damage to the house, and I think the situation was the insurance company, the homeowner's insurance, sent the check to the servicer organization on the reverse mortgage, and they were not endorsing the check. And finally, that lender really took the additional step, even though that it was already past where they were responsible for being part of this, but they stepped in and made sure that that was taken care of, and the check went to the homeowners to pay for the damage to their roof. So I know those servicing issues do become one of the areas of concern that can lead to the negative misperceptions as well.
Yeah, I think that, and I think also miseducation, and this is where I think the professionalism is so important. I know I've interviewed a number of people, and I got given some misinformation that I started to repeat, and I realized, well, hold on here for a second. I'm not advising customers, but I'm on a podcast advising potential customers. And we better, get this sharpened up. But I think that, and so you get involved, I know, with the Certified Reverse Mortgage Lender Association. I'm in real estate. We give out more designations than we do licenses in real estate. I don't think many of them are worth much, but that particular one, my experience in talking to them, and I know that you speak at their events or have in the past fairly regularly, regional and national. What's your experience with a Certified Residential Mortgage Loan Association, is there any other designations or any other standards of excellence that you would advise a consumer to look for when they're looking for a professional to help them?
From the reverse mortgage lenders, that's the only one I'm aware of, and I've never reviewed the curriculum myself. But yeah, I've definitely met many reverse mortgage lenders over the years, and always the most knowledgeable and dedicated people that I've met tend to have that designation. It's through the NRMLA, the National Reverse Mortgage Lenders Association, I believe is the acronym. And so, yeah, it's a dedicated group of professionals who are really focused on providing that education, and so that those lenders are best able to help their clients.
What's the financial advisor's licensing process is pretty intense and ongoing. I think that's where, when they bring in vendors like mortgage lenders or real estate agents, they have a right to be concerned because you're taking customers' money, you're taking customers' trust and putting it on the line. And so, what are one or two things? Obviously, normalize one organization to look at for referrals. If you were a consumer watching this podcast and you had questions, wanted to get a reverse mortgage or consider it, at least evaluate that as part of your plan, would you only discuss it through your financial planner and have them, or your financial advisor, and have them make referral? Would you on your own try to find a reverse mortgage professional? How would you advise them to move forward if they were interested in learning more?
A holistic financial planner can be a good resource for that. Although, again, as we talked about earlier, not all financial planners are on board, so that might be a dead end. Beyond that, though, I mean, that's a good question about where's the best resource to find. Certainly, there's so many reviews online that can be a good resource. I know I often rely on, if I'm thinking about what company to work with for some service or goods or services, having not just a couple reviews, but a lot of reviews. And of course, there's going to be negative reviews mixed in, because oftentimes it's a negative experience that leads to a negative review. So have a little bit of grain of salt with some of the negative reviews. But if it looks like there's been plenty of positive experiences and reviews, that might be worth checking out. There's not really, though, necessarily that I know of, like independent organizations that are providing lists of reverse mortgage lenders. So it probably is more Google type search, looking in your local community, or with a national organization as well, using that to find a local lender. But then you may not have as much control over who that local person is.
It's tough, and I know that there's national organizations that do reverse mortgages, and some of those practitioners are really, really good. But the fat middle of that bell curve, I don't think is. I bank my business at a major bank. I don't want to say their name to embarrass them, Wells Fargo, who give terrible service as a bank. And I had to open a new account for a particular part of my business. I literally had to make an appointment like 10 days out, and I didn't want to wait. And I went to the branch. And I had to fight my way to open an account at the bank. And so I think the same is true with reverse mortgages. Obviously, these 800 services can be treacherous, yet there are originators within those groups that are good. And so anybody who's watching this, obviously get referrals. I think Normal has a list of their members. These are certified and educated members. And of course, if I can help out, feel free to reach out to me. I'd be more glad to introduce you to people in your local area. But this is one of the tough parts. How do you find somebody? And I just don't think there is a good answer. I think your financial advisor is a great place to go. But financial advisors have so much to keep track of these days, so many different areas. As you say, they may not be positive about it, and more importantly, they may not know much about it, and that becomes difficult. So we want to try to get people involved in those decisions. So okay, and so I guess last I guess I would say you obviously come across financial advisors, some who do really, really well, and you come across other ones that I'm sure like any other business are struggling. If you're given financial business advice, career advice to somebody who is, well, let me back up before I ask a question. What are characteristics of the top advisors that you work with versus the ones that are struggling or kind of more in the middle of the bell curve? What would you say stand out, one or two things of the ones who are top notch, who do the best work and have the best relationships with their clients?
Mm-hmm. Well, and so, I mean, there's financial advisor is not a regulated term really. So it's even hard to know how many financial advisors exist in the US. There's a lot of people that may just be either like investment managers, stockbrokers, even insurance agents that call themselves financial advisors, but aren't really doing financial advising. And so if you're asking your stockbroker about a reverse mortgage, that may just be, I have no clue what you're talking about there. With my being at an organization focused on educating financial advisors, I probably do tend to, like the universe of financial advisors I'm aware of is probably much better than the overall universe of financial advisors in the US. But yeah, then characteristics of good financial advisors: open to education, working as part of teams, having a referral network. Like if you're a holistic financial advisor and you haven't yet made contacts with a local reverse mortgage lender, amongst many other topics you need to be on top of, you want to get out there and make sure you have those referral networks and resources available to you, being educated on retirement topics. A good advisor doesn't necessarily do everything themselves, but they know what needs to be taken care of, and they have the resources to get you that help, whether it's estate planning attorneys, someone to help with the Medicare decisions around, do I want Medicare Advantage or a Medicare supplement? All these different decisions is too much for just one person. But the good advisors are working part of a team and have referral networks available to them that are able to then cover and provide that advice and service on all the important topics related to financial planning. And there's a lot of professional designations. The RICP is focused on retirement income. You've got some of the classics like either the CFP or the CHFC. Those are general, like, good financial planning designations to be looking for. There's others as well, but that's looking for someone who's focused on that education, has that professional network, is conversant, can talk to you in an educated and informed manner about if you have questions on a reverse mortgage, versus they just simply shut off the conversation because they don't know anything about it. I think those are all characteristics to be looking for.
There's a great book, Who Not How, which advises really to find people who can solve problems at a high level rather than learning how to do it yourself. And I find when I find financial professionals in any field who do multiple things, they tend to do none of them very well. And versus, I'm always amazed at how I work with an attorney that I met maybe through a probate or trust litigation, or an accountant that does a certain thing, and they're so quick to bring in an expert on another topic. And it always is a good reminder to me that the best, in my experience, try to stay in a very narrow focus. They know a bunch of people in the related fields and are quick to bring in the best of those people because that's who they want to work with. And so it's great advice. We have to appreciate kind of emphasizing that. That's not necessarily that they have all the answers, but they have a Rolodex, or I guess in today's terms, they have a contact list of people who have all the answers, and work with them and respect them and appreciate doing that. Well, look, I really appreciate the time we spent, and I know I've kind of gone a little bit over. I know, Wade, that if someone get in touch with you, wadepfau.com is your website. Any particular upcoming events, programs, books? What if somebody's looking for more Wade Pfau, what should they be looking for?
Well, I've written 4 books. One of them was on reverse mortgages, and that's updated for 2025. But in general, I tend to suggest a retirement planning guidebook is my effort to really provide that one-stop resource on all things retirement income. And it includes a chapter that summarizes my reverse mortgage book, as well as chapters that summarize the other books I've written as well. Otherwise, I do a lot with Retirement Researcher, which is an educational website. And we're gearing up in late October to have a retirement income challenge where we work people through a week-long experience of understanding your retirement income style, calculating your funded ratio as a financial plan to look if you're on track for retirement. And it's all part of a free week-long program that we run. So you might want to sign up for our mailing list on the website if you want to learn more about that.
Fantastic. And for professionals, obviously, you don't have to know everything that Wade Pfau knows. You can learn a good chunk of it and then be able to bring him in and bring his books in as resources to your customers to participate. So, Wade, thank you so much for your time today. I really appreciate not just what you did today. I was excited to reach out to you for what you do for our industry. I think you really helped create a kind of a North Star of education and reliance on data rather than just opinion. So on behalf of the industry, as a real estate professional, I just want to thank you for all that you do for us.
Thank you. It's been a pleasure talking to you.
And for everybody else, this is Reverse Mortgage Podcast. We get together every week and we interview most commonly reverse mortgage originators and professionals, but also vendors, in this case, an educator who can help us learn how to serve our customers better. We do this, feel free to reach out if I can help in any way at Bill Gross Probate. We have a Facebook group, Reverse Mortgage Podcast is the Facebook group. If you want to ask questions there, look for referrals or post your related content. And as always, make today your best day ever. Thanks so much.